Sovereign wealth funds are the world's fastest growing source of capital. UBS estimates they'll double in size over the next 4 years, giving countries like the United Arab Emirates or Qatar unprecedented power in global markets. Terrence Keeley is a banker with unusual access to this rarefied world. He's global head of sovereign client services at UBS, and he is with us here this morning. Terrence, or Terry, great to have you. Sovereign wealth is a bigger world than most people realize, but let's start with the part that we know best, or at least we think we know best: sovereign wealth funds. Why would Abu Dhabi, this was the big headline we had yesterday, Abu Dhabi expressing some interest in BP. Why would a country like Abu Dhabi take an interest in a stock or possibly some debt or some kind of structured investment in BP?
Well, Eric, clearly the oil industry is one that is well understood in Abu Dhabi. And I think the relations that Abu Dhabi and BP have go back, frankly, many, many years. It's not at all surprising that they would have conversations about their ongoing interests. And I think, as you've already pointed out, there's a growth of assets. At $75 a barrel, there's new assets coming in that have to be invested all the time. In the Middle East, it's an appropriate conversation to have. So
Tony Hayward is doing the right thing, shopping his company around the Middle East. That's where the capital is, and if BP needs capital, maybe that's an appropriate place to raise it?
I doubt Tony would use the word that he was shopping his company around, but he's certainly going back to familiar hands and people that know his company very well. Not surprisingly, I would do the same.
So the cash is pouring into these sovereign wealth funds. It's not so easy to invest cash coming in at that speed. Are these guys becoming savvier investors?
There's no question that there's been a huge amount of pressure on the sovereign wealth funds globally. And there's many different types of sovereign wealth funds, right? Stabilization funds, future generation funds, holding companies for state-owned enterprises. There's a much greater sophistication amongst this group than there was even 3-4 years ago, as their assets have expanded, as you've rightly pointed out.
From your perspective, how has the role that sovereign wealth funds play in global markets changed as a result of the financial crisis? So take us back to where we were in 2007, and how does that compare with where we are today?
Well, sovereign wealth funds were no less humbled than anyone else by the financial crisis. Losses by sovereign wealth funds averaged about 30% through 2008, and I think the long challenged assumptions that they had made about asset class allocations to riskier assets, to private equity, to others, have had to be revisited. There's very few sovereign wealth funds that have not increased their bond holdings in the last few years, for example. So they have taken the risk level down.
They've taken the risk level down. Are they going to keep it that way? No. With all this capital to invest, you can't just buy treasuries. What are they going to do?
Remember the one tremendous advantage that all sovereign wealth funds, virtually all, have, which is that they are long-term investors. And clearly, despite the crisis, whatever you want to say, the outlook for risk assets over the longer term is still superior to bond yields around 0 to 3%. Not terribly attractive for the longer term, is it?
Now, let's talk about one of these ideas that I know you're big on, which I find quite compelling. Sovereign wealth funds, $3 trillion of capital, possibly doubling, but they're just a drop in the bucket when you consider the bigger world of, call it, sovereign wealth.
I think it's important that you bring that up, very important, because in fact, sovereign wealth funds manage less than 20% of the asset pools that are currently controlled by governments or government agencies. Central banks, multilateral organizations, these are even huger pools of assets. $18 trillion.
And we should consider this investable capital.
Well, it is investable capital, right, Eric? Because absolutely clearly, whether or not it's foreign exchange markets, government bond markets, high-grade credit markets, these, in fact, are markets that central banks dominate. There is no way to understand where foreign exchange markets are going, or where interest rates are going, or where credit markets are going without understanding how central banks are allocating their capital.